Monday, December the 19th. Hello, everyone, and welcome to the program. This is Business Incorporated. At this time here on Channels Television. Thanks for joining us. Let's get the show started. Coming up, Nigeria's Minister of Budget and National Planning, Senator Udoma, presents breakdown of the 2017 budget estimates presented last week by President Muhammadu Buhari. Meantime, West Africa Regional Economic Group, known as ECOWAS, calls on Nigeria and other countries to undergo necessary structural reforms to improve their economies. An oil giant, British Petroleum, makes new investments in Africa's northwest gas fields. Stick around for the details as we get the next 30 minutes started right now. As we speak, Nigeria's Minister of Budget and National Planning, Senator Udoma, is presenting a breakdown of the 2017 budget estimates laid before the National Assembly last Wednesday by President Muhammadu Buhari. Attending the budget briefing ongoing at the Presidential Villa in Abuja includes heads of government ministries, departments and agencies, representatives of states and local governments, private sector operators and associations, captains of industry and civil society organizations, as well as the media. President Buhari has said the implementation of the 2017 budget will be based on government's economic recovery and growth strategy. Meantime, North Africa's largest stock market in Egypt is making the headlines today as the new trading week gets underway. The Egyptian stock market was piping out around 3% gain on the benchmark's EGX 30 at about noontime. As we speak, that's about slightly above 3%. Take a look at the rest of the continent's major bourses there. Nigeria stock market trading water 0.1% about an hour ago. The South African GSE is making some gains, still less than 1% at about lunchtime Nigerian time, 50,097 on the GSE offshore index. And the Kenyan stock market, that's the Nairobi Stock Exchange, that's the Friday figure, off track 0.1% at 130.81 reading on the all-share index. Cross over to Middle East and look at Qatar's stock market climbing in early trade Monday after the Finance Ministry published the 2017 state budget, while large cap shares weighed on other regional markets within the GCC. Dubai's main market, it's called the DFM, lost about 0.1% in the thin trade, but you see the Dubai FM there off track about 0.64%. Also weak in Abu Dhabi, where the index slipped about 0.2%. The Saudi Arabia index was dragged lower by what you see on your TV screen. That's a bit of a snapshot of starting the week in the Middle East. Of course, today is the second trading day. Trading starts on Sunday in the Middle East. Let's look at Europe right now. So in session, Europe's stock market started the day a bit lower as markets enter the usually quiet midweek or week for volumes ahead of the holiday season. Quite a number of companies on tap today. The Italian bank Monte dei Paschi and Lufthansa Air Berlin take over Squabble, as well as the German lending giant Deutsche Bank. Let's cross over to Frankfurt and discuss the details of this company news with Conrad Bilson, DWTV Channels TV correspondent, live from there. Conrad, it's good to see you. Let's start with the Sky, the takeover between Lufthansa on one hand and Air Berlin on the other. This looks like a serious story there between these two German airliners. Talk to us on this, Conrad.
Well, Bosun, this is the story of the day, sort of. Shares in Air Berlin here in Frankfurt up 14%. For years, the large shareholder of Air Berlin, the Abu Dhabi-based airline Etihad, has been fueling Air Berlin with fresh money. But now this seems to come to an end. Etihad itself has problems. It yesterday announced job cuts at Etihad itself. And at the same time, it was announced that Air Berlin's boss will have to go. The new boss now at Air Berlin, he comes from Lufthansa. And for all what the rumor mill tells us, this new boss of Air Berlin, ex-Lufthansa executive, got a contract that allows him to eventually come back to Lufthansa. So all this looks like the shareholder of Air Berlin, Etihad, on the one hand, and Lufthansa, on the other hand, are seeking common ground what to make with the future of Air Berlin. What's not likely is, a quick and dirty takeover of Air Berlin by Lufthansa. The high amount of debt that Air Berlin has would be an obstacle. Also, probably competition law. But quite obviously, investors are keen to take part in that speculation today and hoping that they will benefit from it.
Yes, Conrad, whatever happens, investors are always looking for where to make money. I'm not sure they care so much about who takes over who, as long as return comes on investment. That's on one side. But look at Italy. The embattled lender, Monte dei Paschi, is set to launch a share offer today. That's one of his last-ditch attempts to avert being taken over by the government. So how is this affecting the shares of the bank, and is it spreading across the counters in the region?
Well, Bosun, this is one of the stories really weighing on investors' minds today and limiting the optimism. Shares in Monte dei Paschi are plunging 8% today. You know, the problem is that Monte dei Paschi wanted more time from the European Central Bank in order to make sure that it has the backing of institutional investors when it tries to raise fresh capital. The European Central Bank said no. More time wouldn't really help Monte dei Paschi, so that now the bank in Italy has to try to convince its institutional and retail investors at the very last minute. And a lot will depend also on the bondholders of Monte dei Paschi. Many of them, you know, simple Italians, people like you and me who try to save for their retirement by buying bonds of Monte dei Paschi, many of those will have to consent in a swap of their bonds into Monte dei Paschi shares, and this will likely happen with a loss. And that's the major factor why many people are so skeptical that Monte dei Paschi will get the backing for this capital increase from investors.
Correct. Not always very easy recapitalizing a bank when it gets into trouble. One of those company organizations that get really a little bit unnerving for investors and everyone trying to recap a lender. But was a different story for Apple, for example, appealing against the EU ruling, stating that it needs to pay back 13 billion euros in taxes. Of course, for Apple Incorporated, sitting on more than 400 billion US dollars, $13 billion looks like a slap on the wrist, isn't it? Or is it, Conrad?
Well, if we take a look at the stock price of Apple, it is not very far away from the highest point of this year. So judging from this, taking this as a guidance for how afraid investors are in terms of, you know, this huge amount of tax that Apple might have to pay if, you know, the EU Commission gets what it wants, investors don't seem to be too concerned. Still, the legal situation really has been changing lately. You know, in recent years, tax law in Europe was national law, while competition law was a European affair. Now, the European Commission says that Ireland, by granting Apple those high discounts in terms of taxes, infringed European competition law. And there have been several cases in the past where national governments were forced by the EU Commission to, you know, demand higher tax from companies because of, you know, an infringement of competition law here. None of those cases was as prominent as Apple. In none of those cases such a high amount of money was demanded by the European Commission. But obviously the Commission tries to make sure that by granting ever lower tax discounts, national governments cannot really do competitive law and influence competitive law in the European Commission anymore. So eventually investors in Apple might get a bit more nervous about that tax burden.
Okay, Conrad, let's hang it in there for today. It's a Christmas week. I'm sure we'll have a lot to chew before the end of the week. Thanks for coming through, starting the week for us. Conrad Bosun, a DWTV financial correspondent for Channels Television, live there at the Frankfurt Stock Exchange. Okay, let's get out there. ECOWAS. The sub-regional economic body by the name ECOWAS has asked the economic giants within the region and the rest of them, led by Nigeria, to put their house together. In other words, to carry out quote, necessary structural reforms to improve their economies. The According to the economic bloc, Nigeria and other ECOWAS member states should take appropriate economic and financial stimulus measures in order to be less vulnerable to commodity price fluctuations and improve their economic resilience due to shocks that comes once in a while. So, after an extended period of strong economic growth, many sub-Saharan economies are being hit by a multiple of shocks in recent times. Let's get a sense of where we are right now as far as the SSA economy is concerned and the outlook for 2017. Brian Sturges is the chief economist at World Economics in London. Lunchtime, good afternoon to you. Brian, it's good to see you again.
Good afternoon, Boston. I hope you're well.
I'm doing well. And how's the weather today in London?
Cold, miserable. Better where you are, I bet.
Yes, it's the middle of December. Well, I can see how you are. But hope you're keeping warm where you are there. So what's your general assessment? Are you taking a hot cup of tea or coffee and you're looking at Sub-Saharan Africa, the stories that are coming out all the time? Give us your sense of the 2016 so far. We're rounding up the year in a couple of days.
Well, whatever the weather's like in Africa, the economies aren't looking too well, especially Nigeria, as you'll know yourself. There's been nearly 9 months of recession now. But this is having impacts. The general economic climate is having impact right across the continent. South Africa is more or less stagnant. So, as I say, Nigeria is in recession. Other ones are slowing down. Kenya slightly better, but it's only in relative terms. But one of the worrying things are jobs are down and inflation's rising, which, you know, it's the old fear of stagflation. So not a very nice picture for the end of 2016.
Yes, Brian, it's been about 2 years of the slump in oil prices. And of course, within those 2 years, we also saw the topsy-turvy in metal prices, not with the Maracana's crisis in South Africa and in West Africa, Ghana, wherever you go. So we've seen metal prices also sharing in the downturn in commodity price in the last 24 months. So where do you see the silver lining for African big economies, Nigeria, Kenya, Ghana, Ethiopia, and the big boy South Africa?
Well, the silver lining will come about if there's a big U.S. stimulus. I believe personally that quantitative easing has actually failed in producing a stimulus, but the U.S. Under the new president is looking at producing a huge fiscal stimulus. Whether or not that will come through Congress is another thing, but if it does, that should lift up demand in most of the world, which will help commodity prices. But I think the reason this has just started to hit Africa now is that unfortunately reserves have been coming down, and in many ways the Nigerian central bank could have been a little bit more flexible in how it's dealt with this crisis and used a much lower naira, which it's fought, to help manufacturing.
Oh, okay, Brian, I'm sure we can have more time to discuss this as we step into the new year. We'll keep your eyes on world economics data. But then, in summary, what do you think the December SMI will look like, at least for Nigeria, South Africa, or the Pan-Africa?
Well, the December SMI is looking down. Confidence, funnily enough, is holding it up a little bit, but market growth is showing falls. And certainly in Nigeria, it's shown a continuation of the recession. But confidence, as I say, is bolstering up the indices. But on the other thing, market growth, inflation, and so on, they're looking negative.
Okay. Conrad, we thank you for coming through on the program today. Despite, sorry, I beg your pardon, Brian Sturges, thank you very much for coming through. I understand you're fighting a bit of cold and the weather there, as you said, is a little bit grimy. But it's okay. Light it up a little bit. Thank you. Brian Sturges, chief economist at World Economics in London. It's looking like a bit of a positive Stocks futures on Wall Street's opening bell will be about 3 o'clock Nigerian time today. That figure is looking a little bit from the Dow Jones Industrial Average, still looking for direction around the 20,000. They didn't cross that last week. We're back after the break. First currency trading day for Nigeria. That's what we'll talk about when we come back.